So we've just seen the Apple earnings. I presented it live on my show as I present all the major earnings and any one that any of my members request we cover. I'm keeping the studio green because I am up again today, consistently beating the market, consistently beating Warren Buffett. However, Apple is red. Shall we go red? Well, we probably should then. Let's do it. Unfortunately, we'll turn the studio red. This was not a good earnings. However, Tim Cook does his thing. Good morning, good morning. Tried to spin it as a positive by starting off selling the products. I am an Apple fan. I've got all Apple products. Everything in my life is Apple. I love it. However, I'm an investor, not a gambler. I'm not buying stocks that just something I like or has a great track record. It's where I can make the most money. Simple as that. I buy the products, doesn't mean to say I have to invest in the products. We've just heard the Apple earnings and it was exactly, sadly in a way, but reassuring that I can still do analysis, wasn't a surprise that it was a bad reaction and there was some manipulation played in there. So during my reaction video, I'm going to give you the referral to my previous video, which said exactly what was going to happen in this earnings, and it did. So you can go and check that out. I'll give you that link in a moment to the full technical analysis I did before the earnings. I'm not going to do that during this video, but you can see exactly why it went down before the earnings was reported. You can go and see that. What we've got tonight is a little bit disappointing. So if we're looking to invest, we're looking to see where is our money best? Where is my money most likely to make a profit? Apple's a great company. Of course it is. It's not going anywhere. It's got a good balance sheet. It's no issue with its solvency. We showed you all of that earlier. We're not going to cover that on this video. We're just going to say our reaction to the earnings. Of course, Tim Cook did his best to try to activate the stock. It didn't really work. I am out of Apple at the moment. Here is my position. As you can see, I'm out. What we got just as the earnings came out, and it was visible to those who made this action, because you or I, retail investors, cannot pop the stock like this. It shot up about 2% above this marker here, 2.5% to 3% in moments. That was whales, insiders, trying to activate the stock, pumping it up, knowing it was going to go down. Whenever that happens, you as retail investors should not buy. That is a very dangerous time to buy. You'll get stuck holding the bag. And if you had bought that pump in that moment, you would have been holding Apple stock at a loss for at least 6 months. And I'll show you why. Most of the information is on the previous video. I showed you a 14% at best for 12 months is your target, 14%. If you'd bought that 2% plus 2.5% to 3% above here, you would have been holding the bag for a year. No money made whatsoever. The dividend isn't worth squat, I'm afraid. Dividend on Apple isn't worth anything. It's too small to be worth anything. It's growth you need. So if you'd bought it on that pump, you'd have been holding the bag on Apple for a year. Great, love Apple, but as an investor, we've got to look for the value. If you're not buying the value, why are you here? What is the point? And it went down as predicted. Now we need to look at the reality of the numbers. We're down now over 3 months. We're down over 3 months. That's not good for Apple. If we look at the year to date, we can see it's year to date, it's up at 31%. Okay, great. We've just finished a massive overpriced, overbought bull run. Can it continue? No. We're now seeing constant declines, and we're seeing deflation. We're seeing Apple reduce their costs, and I don't see that changing for the next 6 to 12 months. So as an investor, we don't want to be doing that right now. Okay, I am going to get back in Apple around about the 150. Some of you say, "Oh, you've got no chance." You've got every bit of chance. Let's look at some metrics right now. Over the last 90 days, the last 3 months, this was the sentimental analysis of the stock. Predominantly good news. The green is the good news, the red is negative, and neutral was 207 is the blue, 217. So over 90 days, the company had mostly good, positive news to put out. The last 30 days, it decreased, more negative news. Over the last 7 days, it decreased again, more negative news. Today, it decreased again, much more negative news. So for an investor, this is a really bad sign, and you don't want to be in the stock at this point. If you're in it years ago and you bought it for $50, that's fine. But you don't want to be in the stock right now or looking to buy it right now. That makes no sense at all. Sorry if you love the stock, but it just doesn't make any sense. Let's get some more information, which is very important. Very important. This has just happened. Apple exceeds expectations with strong iPhone and services performance despite fourth consecutive sales decline. This is going to continue now. We're going to see more because they're having to reduce the price of iPhones to try and encourage buyers. We are getting exactly what the Fed wanted. We are now getting the economy to cool down. Inflation's coming down, great. Interest rates have peaked, great. But remember, it all has a lagging effect. It takes time for it to filter through. The economy is 6 months behind the markets. The market is ahead. The market is pricing in the next 6 to 12 months. The economy is behind. The economy and people, human beings buying stuff, are now experiencing what the Fed has put pressure on over the last year and a half or so. Even though rates have peaked and interest rates are going to go down in the spring and the summer, I'm 100% certain of that. I called the last two price rates, and I also called the bull market before the banks called it. So I've got some record of being right about that. That's great. And as investors, we're ahead of the game. But the people buying the stuff are still going to feel the pain for another 6 to 12 months. So we're still going to get some bad news. Still going to get some negativity on Apple. If we look here, Apple announced its fourth fiscal quarter earnings, surpassing analysts' predictions for sales, earnings per share. Great. They beat earnings. Great. However, as we know, what's important about earnings is not what they do. It's what they say for the future. As investors, we're looking to see where our money is best placed over the next 6 to 12 months. The company also disclosed a decline in overall sales for the fourth consecutive quarter. That's a very long track record of it going down, and it's going to continue. So if I bought Apple today at this valuation, I'm going to be stuck in the stock. And that's not what investors do. All non-iPhone hardware businesses experience a year-over-year decrease, notably the iPad and Mac segments. To compensate for this decline, Apple emphasized the stronger than anticipated growth of 16% in its online services division. Okay, some good news, some not so. All right, I've got, while I was preparing during this earnings, I was preparing some other information, which I'm going to share with you now on the screen. Thank you very much for your subscription, Michael Howes. Thank you for supporting the channel. Let's listen into this, and I'm going to give you my reaction on this on this interview that happened just some moments ago, and we can react together to this. Very, very important reaction to Apple earnings this evening. All right, let's go into it. Here we go.
Apple doesn't provide forecasts anymore. It will give us some kind of hint of what it's looking forward to on the conference call. But in terms of the numbers that were reported, what gets your attention?
So this is just a few moments ago, very latest news. Let's hear this analysis. Apple service revenue reaches new all-time high. That doesn't mean to say you buy it. That means you find an entry and have patience. It's where it's going next is what's important.
Oh, the services revenue really stood out to us. I was not expecting this big of a beat. So that's good news. On the other side, China numbers were below what we were looking at. So that's a bit of a fail. So the most important part is going to be when they get on the conference call, they need to tell us what's happening in China and what can we expect for next year. I think that remains the most important question for the stock right now.
And of course, we've just found out things are slowing down. So it's very nice to have a headline breaking news. We got a beat, but it's more important now what's going forward. And again, I can't overstress. If you want to look at my previous video of the balance sheet, the cash burn, the revenue, the so on and so on and so forth, you can see quite clearly, if you study the numbers, not just join a fan club, you will see that Apple now is too expensive. As an investor, we are looking for value. You don't pay $10 for a can of Coke. You only pay $1. Let's have a little more of a listen.
Let's talk a little bit more about China, though, because, I mean, the more you look at it, coming in $2 billion less than what Wall Street had expected, it's a massive miss. How much of a long-term problem is that here?
It's a huge problem, and we heard on the call that Tim Cook tried to downplay that. It is a huge concern. I think they are quite concerned from the standpoint of investors. Great company, but investors aren't going to stick around. They're going to sell. They bought a long time ago, the majority of Apple investors, and they will buy back when it's lower.
Yeah, I think that's the biggest thing we're going to find out on the call as to whether they are losing market share to Huawei or is this more a consumer spending slowdown. If it is a consumer spending slowdown, then I personally am not that concerned. Maybe things get pushed out for another 6 to 9 months. But if they're losing market share to a local phone maker, I think that's a bigger concern because China is, for the midterm, the big growth driver for Apple's products. Now, the services unit, I think this is going to be another story, is how did they actually manage to get 16% growth right now, where we were expecting a lot less than that.
There's no doubt about it, in my opinion, that we will see some competition coming from Huawei. I'm very certain of that. If you look at their numbers, you can see that they're taking market share away. So yes, they are. Apple is still a great company. However, it's losing market share. It's reducing prices. It's not a good time. I repeat, not a good time to jump in and buy the stock right now.
We should mention that for the iPhone, the revenue of $43.81 billion is higher than what analysts had anticipated, which was $43.73 billion. But as Mark Gurman, who is kind of our expert on all things Apple, certainly Apple devices, he makes the point of saying this was a slight beat, but not all that impressive, given that a year ago, the iPhone 14 Pro couldn't be sold for several weeks because of the Foxconn slowdown.
Exactly. It's all very well saying the headline, it's a beat and it's great, but it's a far worse number than we've had in the past. iPhone is losing dominance, no question. It's not innovating enough. Nothing's changing. I have not bought a new iPhone for years. I've only got the recent new phone because mine fell in the water and I broke it and I had to replace it. But it makes no sense. There's no reason to buy the iPhone. I've got the iPhone 14 Pro. It's no better than my iPhone 10. Nothing's changed, and they're telling everybody the camera's a bit better and the battery's a bit better. And by the way, my phone is about 8 months old and it's already down to 83% battery capacity. There's something wrong with my battery right now. So things are not all great in the camp with Apple
due to COVID. So you're looking at comps that should prove more favorable for this year, and hasn't. Anurag, what do you make of that?
No, I think that's the most important piece. We are running into very easy comparison in the current quarter or the December quarter, which is the holiday season. Last year, we were not able to get phones because of a problem in China. So if they are not able to show growth this year, then it's going to be a bit of a problem for them. I think the comparison.
Absolutely. And what we're going to see is that the big investors, the Warren Buffetts, the institutions, they're on top of the figures. As am I, by the way. With my software that I have now, the equipment that I have, I'll be looking at the sales daily and weekly, and I'll be looking to see if there's any rally in December. But I'm going to put my name in the sand now and say it ain't going to happen. So Apple, great company, great for the future. Just not investing in it now.
Comparisons are really easy, but China remains the big wild card right now.
And Anurag, let's also talk about Mac, because, I mean, when you think about the Mac family, it's definitely become a smaller percent of their overall shares, but still, it was a huge miss on Mac as well, about $1 billion below expectations. But you weigh that out across some of the other areas of the business. How do you think about that?
Very, very good point. I've just bought myself the new Mac Pro Studio Max Ultra 2. Best computer you can buy at the time, a few months ago. And again, they're not selling them. They're very, very expensive. I was lucky, to be able to afford one, but they are seeing a sharp decline there as well.
Yeah, so from our side, Macs will outgrow the entire PC market over the long run.
Long run. Long run is the key word, not an investment right now. Put your money in Palantir when it comes back down. It's too expensive right now. Virgin Galactic, yes, I know, I say it. There's other things now that have far greater growth. This is not a dividend stock. There's no dividend advantage here. It pays a dividend, but the dividend is irrelevant. It's a growth company. It can't keep growing at the rate it has without some innovative change.
And that's because they have their own chips. The product is phenomenal. But at the same time, we know the PC cycle moves up and down. So I'm less concerned about the Macs. Longer term, I think they're going to gain share at any given quarter, at any given 6 months. Things could be lumpy. So if they fell down right now in 6 months, it could be the exact opposite of that.
Yes, it could very well be the opposite of that in 6 months. But right now is not the time, in my opinion, to buy into Apple. Anyway, there's my reaction to the earnings. If you want to see my full technical breakdown of who's on the inside buying Apple, if you want to see who's selling on the inside of Apple, if you want to see their balance sheet, the expenditure, the margins, how they're moving and changing over time, fine details. I have all of it in a video I made before the earnings. Just before the earnings, I told you and predicted accurately where the stock would go, what it would do, and it did. If you want to go and check that, click above my head. That will take you to the full video of the technical analysis that I did. Remember, everything on my channel is aimed to be the most honest channel on YouTube TV. It's not a YouTube channel. Just because we're on YouTube. Is Sky News a YouTube channel? Is the BBC a YouTube channel? No. I want to be a TV channel. This is a TV studio, and I am not here to sell videos, even though that's might appear to be what I do. It isn't. I am here to build a community as I did as the world piano man when I performed around the world. I'm here to build an audience, to be known as the most honest person on YouTube TV. I put the effort in to bring you the best, most reliable, most accurate, most detailed information supplied to me by the best industry and the best software that I can get my money on. Plus, people support me with different technologies like some of you just saying a few moments ago. So, this is not to try and tell you you're all going to get rich by buying Apple, or we're all going to lose our money. You won't see me doing those videos like Meet Kevin and others to try and sell the videos. You will follow and come back to me because we'll build a community together based over time, based over trust. My thoughts tonight is no, not by Apple. It's not the best use of my money right now. Check out all the videos. Join me on X. Sign up for my newsletter. All the links are here and below in the description. You can get my newsletter. We've got giveaways, information about what I'm buying. I always post on X before I buy anything and before I sell, so you know what I'm doing. Why do I do that? Again, that doesn't benefit me. It's because I want to demonstrate to you that I'm being open and honest. This is my real trades, my real money, my live positions, my whole bank account is here live in front of you. And talking about that, it might be a red day for Apple, but it's not a red day for me. It's a very green day. Up today, 8.4%. This is my portfolio, way ahead of the markets, way ahead of Warren Buffett. There is my portfolio. $52,000 started at $5,000 just 2.5 years ago. That's it from me. Over here, you'll find more. I was going to do that, wasn't I? Over here, that's better. Over here, down here, you will see we learned about this afternoon, the earnings and everything else. I will repost the earnings shortly when I've optimized the audio to give you the best experience. Until tomorrow morning for our season 3, we're back with our Friday phone-in. And then, of course, we have Sensei on Sunday. Make sure you join and tune in for Sensei's setup for the crypto week and all the technical analysis for the week. Until then, as always, take care of yourselves and each other.